All right, today we're digging into one of the wildest, most shocking single-day stock moves I have seen in a long, long time. We're going to talk about a company you've probably never heard of, BNAI, and how it completely defied financial gravity, leaving Wall Street just scratching its head.
So first things first, let's just lay out what actually went down on January 26th. You got to see these numbers to believe them. In just one trading session, BNI's stock didn't just go up, it went nuclear, a gain of 276%. I mean, that's what you hope for in years of solid market returns, all packed into about 6.5 hours. And the trading volume? It was just off the charts. Almost 34 million shares were traded. Now get this, that is more than 12 times the total number of shares that are even available to trade. The company's entire float, as they call it, was bought and sold over and over and over again. All that chaos created this absolutely dizzying price swing. The stock was all over the place, bouncing from a low of about $26 to a high of over $67. It finally settled at an incredible $62.08, up from just $16 the day before. And that brings us to the big, flashing question mark in the middle of all this. How on earth does a company that, for all intents and purposes, was on the very brink of going bust, suddenly become the hottest thing on the market? The story just doesn't add up.
Okay, so to solve this mystery, we have to ignore the market frenzy for a second and look at the actual company. What was its real financial health? Let's dig into their own filings with the SEC and see what was really going on.
And this right here shows you just how insane the disconnect was. At its peak, the market was saying BNI was worth almost $280 million. But according to the company's own documents, it had only about $102,000 in cash. Not million, thousand. And believe me, it gets worse when you look a little closer. In their last reported quarter, BNAI lost over $2.4 million on just $60,000 in revenue. Let that sink in. For every single dollar they brought in, they were losing over 40. And their short-term debts? $12.3 million, completely swamping the assets they had on hand. In fact, the situation was so bad, BNI was legally forced to put this warning in its own filings. This isn't some analyst's hot take, okay? This is the company itself on the record admitting that it might not even survive. So it's clear the company's fundamentals were a complete mess. This was not some hidden gem about to break out. So what on earth happened? Well, the answer is in this weird market dynamic where sometimes really bad news can create this explosive potential.
And it all starts with something called short selling. Basically, it's a bet that a company's stock is gonna go down, that it's gonna fail. Investors borrow shares, sell them immediately, and their whole game plan is to buy them back later for a much cheaper price.
And with BNII, a ton of investors were betting against it. A whopping 41.5% of the company's entire tradable stock was sold short. I can't stress this enough. That is a dangerously high level of negative bets against one company. And to make things even crazier for these short sellers, the fee to borrow the shares they needed to make the bet was a jaw-dropping 463% annualized. This put them under just immense financial pressure. They had to be right, and they had to be right now. So you see how the stage was set for a perfect storm. First, the company did what's called a reverse stock split. The main result of that is that it massively shrinks the number of shares out there to trade. So you combine that tiny supply of shares with that huge number of people betting against the stock, and what you have is a powder keg just waiting for a match. And in a situation this tense, you don't need a bombshell, right? You just need one tiny little spark to set the whole thing off. And on January 25th, the day before the explosion, that spark came in the form of a simple press release. BNA announced a new deal with a company out of South Africa. The big headline number was a payment of $2.05 million, and it was framed as this major revenue-generating deal. But here's the catch. When you actually look at the fine print of the deal, you find a critical detail. This wasn't revenue, not in the normal sense. It was actually an equity investment from that partner company, which BNAI was very aggressively deciding to call licensing revenue to make its numbers look way better than they were. But here's the thing about the modern market. The high-speed trading algorithms, they don't read the fine print. They saw that revenue headline and just went nuts, triggering a massive wave of automated buying. This sudden jump in price forced all those short sellers, the people betting the price would go down, to panic. They had to buy back shares at any price just to cut their massive losses. And that right there is the textbook definition of a short squeeze. Okay, so let's take a step back and try to make sense of this. What was this whole event? Was it the start of some miraculous turnaround for this company? Or was it just a purely mechanical breakdown in the market that had nothing to do with reality? Well, when you actually look at the evidence, the conclusion from every angle is pretty much the same. From a technical chart reading perspective, this move was so rare it's basically a statistical impossibility. It just can't last. Fundamentally, the valuation was completely absurd for a company that was basically insolvent. And from a forensic view, the catalyst itself was built on an accounting trick.
And just to put that valuation in perspective for you, even with this new revenue, BNAI was trading at a price-to-sales multiple of 110. That is more than 4 times the valuation of a fantastic, high-growth AI company like Palantir. It just makes no logical sense.
So, here's the kicker. What's going to happen next? Well, the company is desperate for cash, right? So the most logical thing for them to do is take advantage of this crazy, artificial stock price and sell a bunch of new shares into the market to raise money. But that very act, creating more shares, increases the supply and instantly destroys the scarcity that caused this whole squeeze in the first place. And this whole saga with BNI really leaves us with a huge question for anyone trying to navigate the markets today. When a stock's story, the hype, the excitement, goes to war with the cold, hard numbers on a balance sheet, who actually wins? In the short term, it can be anyone's guess. But in the long run, the numbers almost never lose.